Hello, this is Ronnie. I'm sharing with you here a clip taken from a long video that I just finished to record for my subscribers. I think you will find the clip very interesting. Okay, that's silver. After we discussed in detail the situation in the Australian dollar, US dollar, I hope I don't have to make a lot of introduction here. Why it is important for you to have both. Apart from having, of course, the chart of gold and the other metals, also to consult closely the situation in the Australian dollar, US dollar. And the chart of silver so far is pretty consistent with what you would expect from a bearish price action, the development in the bearish price action. It attempts to rally. It doesn't even go higher than the previous high. Do you see that? And it sinks back. It sinks back. The selling pressure is pushing it lower and lower. Also here was an attempt, a flash rally, came back just as fast. Came back, boom, bang down. This is very bearish price action. Okay, and even though gold is slightly stronger, I think that the pattern in silver is for now, the way I see it, is uncompromisingly bearish. And when I couple that with what I see in related markets, I have no problem staying bearish on the precious metals. The various ABCs here, in my opinion, should be taken as part of this ongoing correction. It is complex. It is not terribly clear whether the second wave ended here on this scale, and that gives us another one too. I would suspect we should basically take all of that as part of a second wave. That is also the wave count that fits in the case of gold. I think it would be. It seems to me that would be the right thing to do. Okay, take all of that as part of a second wave, and the misery in precious metals is not over, I'm afraid. It's not over. The mining sector has not hit the floor yet. No. And moreover, the way it came down here, it looks like it's running for 5 legs down, which is, as you can imagine, is in itself a bearish signal. Here it is. We possibly have a 1 2 1 2 3 4 3 4 5. Yes, we could have some sort of feeble rally, something like that. That's a 10 minutes. Yes, 10 minutes scale. A feeble rally, probably not topping 14.15, and then the next leg. The next leg. If the second wave correction is over, that will be our first leg of the third wave. Remember, that will be the first leg of the third wave, and things could really race down fairly quickly. Should that be the case, this is the back to the daily. That's the 50 moving average. That's the 200. That's the 21, and that's the overhead resistance, the very immediate overhead resistance, where you can see it was enough now for the last 2 months or so to each time when it attempted to come close. Even when it jumped above, didn't hold, it just pushed it down. So nothing bullish is going to happen with this metal, not until at the very least we see something like that. You see, when we see something like that to build up, then maybe there is some sort of change in trend. Maybe I'm wrong. Maybe the bear is exhausted here, whatever you want to say. Although at this point in time I really don't see signs for that. Absolutely not. But this must take place before we begin to consider any bullish angle on silver, and I would say even in the case of gold. Now here's gold. That's the daily, and we have assumed that the first leg ended right here. You see, we took this as an ABC. We have treated this as an ABC right here as an X. I told you that's an A, that's a B, and I told you that the C could run up to an extension which could hit 1114.53 right here, because if you take an extension of the A, you lift it up from here, it gives you 1114.5, okay, and it did go for an extension. Now, of course, we don't know if it's over. There could be an attempt to rally slightly higher than that. It is now hitting pretty serious overhead resistance. In the case of silver, as you know, silver was not able to mount such a rally. Gold is stronger, but the entire pattern is still, in my opinion, corrective. Okay, it is still corrective, and it is rare if you see, I mean, it's very rare to see gold and silver going different directions. It's almost certainly one of them is wrong. And now when I look at what's happening in the related forex pairs, for example, the Australian dollar, US dollar, I'm siding with silver. I hope it's not difficult for you to see that. You look at what's happening in the currencies. The currency is another voice. Is another voice of the mining sector, if you like, operating in the country of that currency. In this case, we're talking about Australia. Yes, the currency is on the floor. It's looking down, and it's just part and parcel of the whole thing of the mining sector. Now, this is the 60 minutes of spot gold priced in US dollars. That's our A. That's our B. That's 1, 2. We thought we had this one as a fourth wave. We took this one as a 1, 2, 3, 4. But the run up was so extensive. It's not impossible. In case you don't know what I'm talking about, that was the idea that we introduced before. We took this as a fourth wave. Looked ideal, but the run up extended. So at this point in time, I would like to present a variation that possibly this is a 1, 2, meaning that's a failure. We had a 1, 2, 1, 2, 3, 4, 3, 4, 5. That one failed to jump above this level, and that's your correction second wave. You run up, you have a 3, 4, 5 possible spike top. Now, if it's not over, it's not over. This is the projection for a slight continuation in this rally of gold. Okay, converging into a triangle, another pop above 11.14 or so, 11.15 to terminate the entire run, and then expect a breakdown. So what I'm suggesting is that you hold fire as far as going long. I think it's way premature to jump on the bandwagon of the bulls, because the bulls might not last very long, you know. I think it is way premature. Just in case you would like to have further information or to learn more about my website, I thought of introducing very briefly my website here. That is the front page, and if you scroll down, you will see there are quite a few examples of recent clips that I added. I also have a lot of charts here. If you're interested, there are a lot of charts that you can study, examples of past market action. There are also more charts here under resources at the chart galleries. You have chart galore number 1, number 2, plenty of charts. You've got useful links, recommended reading list, okay, terms of use, private policy. You can get in touch with me if you have any issue, any question whatsoever. Here there is a description of the services, okay, and in fact, this you will see once you log in. It will let you see what you subscribe to, okay? So if you subscribe to the Wave Mastery daily service video, you'll get that. If you subscribe to the weekend service, you'll get that. But before subscribing, you might want to actually take a look at a trial. Okay, so you can actually have a trial of the daily video service, the full service. You click right here, and it takes you to the page of the trial. It's 7 calendar days. It only costs €2.99. Okay, €2.99. You can pay with PayPal. It gives you access to the archive. You can also get in touch with me if you have specific questions. I will do my best to answer that. That is the daily service trial, and that's the daily service, the full scale. Then we have the Wave Mastery weekend video service trial. This is also priced at only $2.99. It gives you 12 calendar days. You get 2 long videos with that, okay, fresh videos, and you get access to the archive. And again, you can get in touch with me if you have any questions. That is the issue of the trial. Here on the main page you have some articles that you might want to have a look at, And that's the very brief introduction of my website. Hope you enjoyed the clip. Hope to see you on my website. Don't hesitate to get in touch with me. Wishing you successful trading. Bye now.